Welcome to Real Estate Milestones, where we explore fascinating topics in commercial real estate with knowledgeable industry experts. I'm your host, Ben Malik, and I'm a young real estate professional who is passionate about adding value to people's lives through the incredible power of real estate. My goal is to help you discover what the heck is going on in the industry and how you can get involved. This is Real Estate Milestones, where your future in real estate lies just around the corner.
Hello, everybody. Welcome back to Real Estate Milestones. Today you have Mark Updegraff, who's a everything in real estate seems. He's started on with investments and has been a broker for a while, but also owns a property management company that manages 450 doors. And most of all, he's an investor and developer. So we're gonna get a lot of cool perspectives and see how some of these different aspects of the industry work together. But to start, Mark, thanks for coming on the show.
Hey, Ben, thanks so much for having me.
Awesome. So let's start with the first question that we always ask. What's your first milestone in real estate?
My first milestone was purchasing an investment property. It was just a single family, pretty boring, vanilla. It was in a speculative area, but being young and going and patroning some of the businesses over there, I could see that there were some grassroots efforts to really bring a little bit of revitalization back. So it was a risky play. I remember walking through the house after closing, and I had purchased it from this little old lady, and she had stashed a knife in just about every corner of the house, every windowsill. I remember going around with a bucket and filling the bucket about halfway up with these little steak knives that were just hidden all over the place. And I have a feeling it was just so if she ever got cornered in the house because somebody broke in, she'd be able to quickly grab a knife and defend herself. So it was kind of an eye-opening experience. She had lived in it for like 30 years and she was lower income, but she kept up with it as good as she could. We went through, we repainted, refinished the hardwood floors. I did the kitchen and spruced up the bathroom. Nothing fancy, just a little bit of lipstick. And I got that sucker leased out and became kind of bored because, now I've got all this time where I was fixing the unit and I wanted to keep going and I wanted to get some more rentals. So that's how I jumped in. I just bought a single family home and got it leased up.
Awesome. That's pretty cool. And so I guess coming from there, what was the next step and how did you get to where you are now?
Yeah, so I use that as a benchmark. I'm a math guy, so I'm all about the numbers. And I think what a lot of investors don't realize, they analyze the heck out of these things on paper, but a lot of the reality is in the operations, right? So we can do a pro forma before we buy something, but how it performs in reality could be totally different. So I use that first one as a benchmark, and then I've like weaved and bobbed on both sides of the cash flow spectrum where I'm going for more cash flow or I'm going for a better location. The older I get, the more I go for better location. And not to say that the cash flow model isn't relative, it's done well for me, but now where I'm at, I would prefer to have less eviction costs, less deferred maintenance. And in today's environments, with the court systems, it's getting harder to get people out. And I live in a very tenant-friendly state. So having a better tenant where I don't have to worry that they're going to damage it. I know they're taking care of it. I know they're going to pay rents is a little bit of peace of mind. So that's kind of my path. I've been just acquiring as many units as possible. And Rochester is a market that's so abundant with opportunities that I've had a lot of people that have come to me over the years that wanted to invest here, and I've helped them alongside myself get into a number of units. And that's pretty much how I built the management company. They wanted somebody that they could trust to place their asset with, so they could experience, just like I am, the ability to build their portfolio, maybe do some cash outs in a shorter term, maybe like 3 to 5 year horizon. But we're purchasing it, we're underwriting it really conservatively when we buy it, that when we cash out all our equity, we're still cash flow positive. So I think I kind of live in an anomaly where that's actually possible. There's a lot of places across the country where you can't do that, but I've been fortunate to be here, and that's helped me a lot in growing my business.
Yeah, it makes a lot of sense. So you mentioned you're a math guy. I think you also I've seen that you had a start at NASA, but I guess if you want to talk a little bit about your background in math and kind of how that's informed your approach to real estate, at least starting out, and you might think about deals differently. So I'm curious to see what your approach is.
Yeah, so math was always my favorite subject. Matrix algebra, multidimensional analysis was what I did as a grad student. And when you think about real estate, it really is multidimensional. You have a lot of different data sets, but a lot of the dimensionality is actually stuff that you're going to discover in the field. So those data sets are, up to your interpretation. So you've got to get into the field, you've got to see the asset, you've got to know the neighborhood, you have to know other assets in that space. So, having that mathematical background and that analytical background has really helped me. But ultimately, a lot of those data points are coming from experiences versus, data on the computer that you can query, like taxes or insurance and stuff like that. So just having that background and being able to synthesize all that stuff together has really created an opportunity for me to find areas that do tend to appreciate more in the short term relative to other areas. So I'll be looking at things like price per foot, gross rent multiplier, doing full blown pro formas. But really, the nitty gritty of it is getting into these MSAs and breaking them apart and being able to understand how the different sections of the MSA work together. And so I try to have things compartmentalized into pretty small chunks. We might be talking about like 10 square blocks. Sometimes it might be less, sometimes it might be more. You're not going to know what the block looks like until you get into the field and you drive the streets and you start seeing the properties and you can really understand what it looks like. So I've done that over the years, and my map is always evolving. So each year I might go in and I might change the blocks and how they're delineated. They tend to be bound by arterial streets, parks, waterways, and stuff like that. And if you watch how the interplay between one neighborhood and another work, you can position yourself in an area where there's going to be some spillover, there's going to be some creep, right? So if we've got a really, really popular class A that maybe it wasn't even class A until recently, might even started at a class C, it got some of those seeds planted. We had some businesses coming in. It becomes edgy. It becomes kind of trendy. People start planting their flags, but it's still pretty troubled. Eventually, the trouble is going to be gone. If you look at it in a sector, right? So in a particular sector, then you get a bunch of investment, and all of a sudden that sector is class A, the prices are going through the roof. So having that ability to figure out where you want to be in order to capitalize on that has been huge. So if I can identify that area, and then I can position my holdings and my clients' holdings in that area, we end up seeing a ramp up on the price per foot side, the appreciation side of anywhere from like 20 to 50%, typically in like a 3 to 5 year horizon. And that's what I've done. It works pretty well across the spectrum of asset classes. It doesn't matter if it's, a small multi or a large multi. It doesn't matter if it's commercial. It kind of rising tides lift all ships. So whenever I've identified an area like that, that becomes my focus. And there might be multiple areas in one MSA that are all have similar characteristics. That's where I'm targeting. That's where I'm really looking for those deals. And then I'm willing to pay a little bit of a premium to get into it because I know that the premium is still going to be cheap compared to the price in 3 to 5 years.
Awesome. That's great. And I guess the first example I could think of that is like East Nashville. Like I know East Nashville is used to be like a place where there's cool bars and it's like a fun little spot that you might go, but wasn't like the highest quality living place yet. But now it's like blowing up where it's like super expensive and just the hottest part of Nashville it seems. Then it's creeping out more. And I guess I've had a developer on who thought of or noticed that similar trend and built his whole business around it, and it's paid off. But to get a little bit more specific, I know you talk about gross rent multiplier. I know the metric. I don't tend to use it. I tend to think in terms of cap rate. I guess is there a reason why you look at gross rent multiplier, and then how do you use gross rent multiplier to identify these markets that have, I guess, maybe in the path of progress or the opportunity that you've been discussing?
Yeah, it's just a quicker metric to use instead of digging all the way into a cap rate. So I can use it to make zones where the average is going to be in a range, right? So if I've got my 10 block segment, I can tell you that the average across that 10 blocks is going to be a particular gross rent multiplier. And it's just quicker to get that number than it is to get a full blown cap rate. I'd have to spend more time on analysis, right?
It's just
so
relative.
I use the gross rent. Yeah, it's relative. So once I have that map of GRMs, the cap rates are going to be proportional to the GRMs. So I'm basically looking at the same thing. It's just a quicker way to do it. So I use that as my quick test to get those values to make those segments in the marketplace. And then when I'm actually evaluating the properties, I am jumping in and doing the cap rate.
Yeah, that makes a lot of sense. And so I guess, for example, I guess the gross rent multiplier, I guess it's hard to say because if you don't have the cost outlay, it's hard to say, but it's like theoretically it'd be the number that you get would be if you didn't have any costs, how many years it would take to repay your entire basis, right? That's essentially what the gross rent multiplier would tell you. But I guess so yeah, how do you use it in terms of how do you know that a certain gross rent multiplier indicates a certain thing that you're looking for?
The lower the gross rent multiplier, the more cash flow something is throwing off, right? So we just know by doing the math and looking at it where we need to be as far as a gross rent multiplier goes. Numbers change as we get differences in our pro forma, like interest rates or whatever. But the GRM stays consistent. So that's why I like the GRM. I agree it's flawed in that, one property might have certain operational expenses while another property might not, right? So the GRM is not going to reflect that. But if you look at an average value, most multifamilies, depending on what you're looking at. So let's just say we're looking at like a 2 to 4 family. Most of those, the taxes are paid for by the owner, but the heat is paid for by the tenant. And, so there's a lot of consistency in the way that those are operated. So the gross rent multiplier tends to be okay when you look at it on average, but there might be a one-off property where there's one heating system for the 4 units and the landlord's paying for that heat bill. So that gross rent multiplier would kind of skew it a little bit. But, again,
Right.
We're looking at a larger area. We're looking at an average. So just having that overlay, now I can identify a good opportunity, right? So if the overlay is like an 8 gross rent multiplier, it's a nicer area. It's more expensive to live in. But if I can find a deal inside of that where I do a quick check and the gross rent multiplier is like a 6, then there's going to be some extra value in that acquisition if I can get it at that price, right? Because the average is 8, I'm buying it at a 6. So it's just a real quick way to identify what you're looking for. But ultimately, we're always going to go see the property and factor in some of that real life stuff that we need to see: the roof, the windows, the siding, whatever it may be, so we can make a value or a buy decision when we're in the field.
Yeah. So I guess this is a little more tangible. Like what you're discussing reflects something profound about the industry and the way you look at investments in real estate, that we are looking at as investors, we look at the properties as investments, right? As financial vehicles, right? So you're literally trying to figure out, or if you use the gross rent multiplier, you can literally see that this is relatively cheap compared, or I guess the rent is below market, right? So you could raise the rent and that would, hopefully the asset will be in a quality that you can actually raise the rent to equal the rest of the neighborhood. But just I guess that it shows there's like not an arbitrage opportunity, but something similar. But I guess the idea is, I guess, yeah, to make it, that's like a way to make it more tangible. But in terms of identifying those properties, is there like, are there trends for what would lead to that? Is it just owners who don't know what the property's worth or what the rent should be, or how do you usually identify a property like that?
Yeah. So there's going to be a variety of reasons, right? Some simple ones to explain would be, maybe you get a broker that's from a different town. Like we'll have brokers from Buffalo that are representing sellers in Rochester. I don't know how the seller in Rochester got hooked up with a broker from Buffalo, but they did. And that agent just wants to sell the property. They don't understand the nuances of the different neighborhoods. And so when they do a comparative market analysis, they're looking at it on a broader scale than I would, right? I'm going to really dig down into that MSA, and I'm going to pull my comps from those delineators, from within those delineators that I've already made. So I just know the market better. So you're going to have people that just aren't as good. They don't know the market as well, and they just want to make a sale. And then they have a seller that also doesn't know, and that's trusting the professional. So there are going to be opportunities that come up like that. Maybe you've got a spot where somebody died and the heirs just need to unload the property. They don't really care. Typically that property is owned free and clear. They want to get the money as quickly as possible and move on with their lives. They're still mourning the loss of their loved one. So that could be an opportunity that it trades for less. You can find stuff off market where the person's owned it for 30 years. They have no idea what the current market is, and you're giving them a price that they like, they're very comfortable with it, and you can move forward and you can get a little bit of value that way. So there's a lot of different circumstances. Obviously you've got wholesalers that can bring you deals. You can go to foreclosure auctions and you can purchase things at discounts. So there's a lot of opportunity to find these discounts in the marketplace if you know what you're doing.
Yeah, it makes a lot of sense. And so you also, I guess, are on the sales side and do some. I don't know if you're still actively doing it, but I guess what have you? I guess I want to learn more. How have you branched into other businesses, and then how's that's come around to some of the bigger developments and bigger investments that you're focusing on now.
Sure. So I think a lot of the time, what I've learned over the years is that the people that really do well in real estate, they're willing to take a calculated risk that a lot of other people really aren't, because there's no proof that what they're doing is going to work. They're kind of putting it out there. They're trusting their gut. They're going for it. And then, hopefully they're making a nice profit. When you talk about a real estate marketplace, you don't know what the market is going to be in the future, right? And so when you make a buy decision today, it's going to lock in any profit that you make tomorrow. The people that do well are willing to pay what might look like a premium today, knowing that there's going to be an even bigger premium tomorrow. So I've found that, being able to understand that concept, not listen to every single person around you that thinks that you might be making a mistake. Don't bet at all on one deal, right? But as you get comfortable with what you're doing and you see that, okay, I can understand a market, I can take a little bit of a risk, and then if I get my reward, now I can go ahead and do that again. And I can be a little bit more confident that I know better than most other people do. And again, it's all going to be a function of the market. So you have to understand why you believe the market's going to do what it's going to do. Is it going to go up? Is it going to go down? Is it going to stay the same? So that's one of the questions that I propose to people that are kind of on the fence about what to do with real estate. We all know that real estate is a great place if you're in it for the long term, right? If you look at real estate over a 30-year time frame, you're going to do very well. A lot of people don't really want to look at it like that. They'd like to look at it at a smaller scale. And even so, I say, look, if you're making a buy decision, what's the answer to this question? Do you believe that the real estate's going to cost more tomorrow, the same, or less? If they tell me less, I say, then don't buy. That's it. You're not a buyer. If they say it's going to be the same, then I say, well, if you're going to hold it for long enough, then I think you'll be okay. And if they say, I think it's going to go up, then I said, then why aren't you buying? It's going to be more expensive later. Right. And I don't tell them what to do. I know what I believe. When I believe the market's going up, I buy. Right. So, and that's what I've done. And that's what I've stuck with my guns, and it's worked really well.
Yeah, it makes a lot of sense. And so you're also been talking about doing some developments. Guess how did you get into that mindset? And I guess what's different? What are the new things that you're learning or that you've learned?
Yes. Yeah. So I think this is kind of a national trend in that, real estate has just gotten more expensive over the last years, over the last 10 years, specifically a lot more expensive in the last 3 to 5 years. And so some of the space that we used to operate in has really, really thin margins. I'm a location centric investor, and if I see an opportunity, I'm going to grab it. So I positioned myself pretty well when the prices were low, and I grabbed assets that I can now work on, and I can fully, I can add a lot of value and increase their value. So that's what I did. I purchased a couple buildings, and they're on the slate for redevelopment to turn into apartments. And the main driver was that I could see that the opportunities that I had been looking at were drying up, and I wanted to make sure that I had some opportunities moving forward. So that's why I positioned myself the way I did.
Cool. And so let's get a little more, if you don't mind, into some of the details. So you're looking to do resi conversions. I guess what is how do you know that an asset is a viable target for that? I know there's a lot of differences with commercial assets versus residential, especially like you need to have a certain number of windows, you need to have certain egress, you need to have the floor plates can be completely different from an office. I guess what are how do you think about that?
Yeah, I'm looking for something that can be easily converted. So the building that I purchased downtown had been a furniture manufacturing facility originally back at the turn of the century before it became an office. So it's built like a tank, it's clear span. So as far as demoing the existing office, I didn't have to worry about any kind of load bearing stuff. I just went through and had guys rip everything down and throw it in a dumpster. So that was pretty easy. That's kind of what I'm looking for. If it is already a multifamily, I'm going to probably be a little picky on the unit size, because in today's marketplace, I don't really want super small units personally. I want the units that are like 650 to 750 square feet where I can get a one bedroom versus a studio. So I'm looking for things like that. So if it is like a building with all studios, I want to be able to maybe repurpose it, say it's got 50 units that are all studios. Maybe I can make it like 31 bedrooms or something like that. And I want to make sure that it's got a layout that's conducive to doing that. But those are my personal preferences. If you can find a more industrial building, then it's typically kind of like the clean slate approach where you can just get it all open back up to empty space, and then you can have your architect come in and you can go back and forth with the architect and see how many different layouts you can figure out that work to fit with your zoning compliance.
It makes a lot of sense. And I guess what is there a specific asset class you're most bullish on? I think we're getting the impression that you're a market specialist, so you just see opportunities in any shape and form in a certain market. I guess if you don't apply that question broadly, is there something that you're bullish on specifically in a market like Rochester, the ones that you focus on?
I'll look at any opportunities. Like, I'm an equal opportunity investor. If it makes sense, I'll invest in it. I've got some colleagues that really like office space right now. Um, they're seeing some value add plays where they can purchase A-class office and lease it out at a little bit lesser of a rate to kind of compete with the B-class and steal their tenants. So our A-class in Rochester is under rented relative to our B-class as far as occupancy goes. So that's a good play. You've got people that are running around doing the short-term rentals. I haven't done any of that. I probably will stay on the sidelines for that. I don't know how that's going to hold up as far as like if a recession were to come, how that would look. And plus, there's so many people that are pouring into the space that I don't know if I want to jump in now when it becomes kind of saturated. But I do like multifamily. I like self-storage. I'm working with a gentleman here in Rochester that's been doing self-storage for about 35 years. As like kind of a coach mentor, and we're looking to do some development down in Pennsylvania on the self-storage front. I like industrial. I think that, with things coming back to the US, we're going to have a demand for industrial. The different commercial brokers that I know all say that if I've got any industrial, they can lease it up in a heartbeat. So
Yeah.
and I love residential. I love residential, so I'll never go away from that. I'm really good at underwriting it, and I'll always keep trying to find good deals. But here in my marketplace, it's tough right now. The sellers haven't capitulated to the current interest rates, and they're still looking for yesterday's price, and things are just sitting on the market, and not really anything is trading.
Yeah, it seems like a wider than a Rochester trend. That seems pretty national. But I
Yeah.
guess in light of that, I guess what is your view? I know no one has a crystal ball, but like, what is your view on the current economic climate and where the Fed is, and I guess if you have a view on inflation or where this may pan out, I'm curious what your thoughts are.
I think inflation is going to be persistent. They've got the rates hiked, but they can't hike them high enough to really combat inflation the way that they would like to. I don't see it getting down to 2%. I think, 4% will probably become the new norm, where they're just trying to get it to 4%. So I see the value of the dollar continually getting eroded over time. In as far as multifamily goes, I think there are a lot, and even single family, there's a lot of money that went into that marketplace without fixed debts. So there's going to be some distressed sales. I do think there's institutional money on the sidelines waiting to pick those things up. So I don't necessarily think that there's going to be a dip, but there's going to be some people that are buying at a discount. There's a lot of institutional money that also went into single family homes, in specifically down south in like the Carolinas and stuff like that, where their model, I think, was highly flawed. They hired a lot of third party companies to do the underwriting. And during the boom, those third party underwriting companies, they needed to hire bodies to handle the volume. And I don't think the underwriting company really did that great of a job. I know from some people in those companies that they underwrote properties at rents that were not attainable. They underwrote them at $2,400 for a single family house that is actually leased for $1,800. They're on floating debt, and the valuations are also about 20% lower than when they purchased them. And there's a lot of properties that were purchased that way. So I don't really know exactly what's going to happen in each market. I think each market will be a little bit different depending on how many risky things happened in those marketplaces. There's definitely going to be opportunities for people to buy that if they're sophisticated and they can do their own underwriting and do some good underwriting, they'll be able to pick up some other people's mistakes for a discount.
Yeah, I'm sympathetic to that, especially given that institutions in a lot of these places, as you said, were responsible for bidding up the prices, and that was partly the concern of all the people who were, writing these articles like, oh, the institutions are buying up all the properties, unaffordable now. It's like, well, I mean, they're gonna have to deal with the consequences of the high prices they're willing to pay, even if it meant, pricing out. It's kind of like that institutional imperative. Oh, like or single families are great, let's buy it at whatever cost. Where it's like, no, in real estate, what you buy anything at is the thing that you want to focus on.
Right. Yeah, for sure.
Awesome. Well, I appreciate that perspective. Ready for the lightning round?
Yeah, let's do it.
Let's do it. All right. So if you could have any superpower, what would it be?
Probably underwater. Be able to
you'd
go
be-
underwater for as long as I want. Breathe underwater. Yeah,
Yeah.
absolutely.
That's awesome. Cool. You scuba dive?
I do.
Cool.
Love
Cool.
it. Yeah.
So what's your favorite book, or what's the one that's helped you the most?
I really like the Fountainhead.
Dude.
It's not really a real estate book. It's about an architect, but it's got a bunch of characters in it besides just the architect. It's really, really well written. It's a really good story. And I think
So
if people like real estate, they'd like it.
they 100% will like it. So I've bought this book for my mother, my sister, and three of my best friends. So like everyone in my house, or everyone who I talk to on a regular basis, is reading it right now. And I just bought a 1942 Readers Club edition of the book, like this really, really old, like leather bound copy of the Fountainhead in the original. Like it's beautiful. It's like one of my most prized possessions. But yeah.
Nice.
Atlas Shrugged I read Atlas Shrugged before I read The Fountainhead. So Atlas Shrugged, I think, is my favorite book. But I'm actually in the middle of reading Philosophy. Who Needs It? It's okay. Ayn Rand's. It's a series of essays Ayn Rand wrote about philosophy and her philosophy particularly. And it's everyone essentially needs philosophy. That's kind of the goal, or the payoff. But I really recommend it. And also Anthem. I just finished reading that. But Ayn Rand's my favorite author too. So I'm glad you said that.
Yeah, absolutely.
Awesome. So
She's
what
definitely one
motivates
of mine
you?
too.
Yeah. I mean, she's amazing, and you know, existentialism makes such a not compelling point, but like it kind of feels like existentialism is like a knockdown like argument where if like everything's absurd, like can you really make meaning of anything? And like obviously that kind of leads to nihilism. But then when you have Ayn Rand out here saying like, but like look at your life, like you're actually like living a life, like you're not acting in the world as if nothing matters. You are waking up every day and you're doing the things that you do, right? So it's like in a way her argument against just believing that nothing matters is that you have to have a philosophy that can also be applied to your life. Like you have to live your philosophy, and just that idea is powerful because it kind of snaps me out of that philosophy rabbit hole. I'm a philosophy major as well. Just put it out there.
Cool.
But so I really appreciate her. I got Plato and Aristotle. That's what the stack of books is. Awesome. So what motivates you to continue every day?
My family and friends. I love teaching my kids. My father taught me a lot about business. He's an entrepreneur. He's been in business for over 40 years as an owner operator of a trucking company. And when I was younger, I thought, oh man, this guy just works so much. He works so many hours. He didn't hire his first employee until I went to college. And so I have a deep respect for the amount of work that it takes to launch a business. And I know there's people that have launched companies and have done very well and they make it look real easy. But I think for most people, it's an enormous amount of work that needs to go in to really set the foundation of a company. And I definitely wouldn't be here today if it wasn't for the leg up that he gave my sisters and I by, sacrificing all those hours into his business. And yeah, so I want to have I want to have respect for that, and I want to try to give that back to my children.
Yeah, that's awesome. I've some hardworking parents as well that definitely, you know, kind of I think inspired me to be the hardworking person I am today. So that's awesome. And so, what advice would you give to someone who wants to follow in your footsteps?
Yeah, that's a good question. I really like the route that I took, and I think it's um, I think it's more predictable. A lot of people that get into real estate investing think that wholesaling for some reason is going to be the avenue they want to go. I don't think that's the best avenue personally, maybe for a few people, but if we're talking like on a broader scale, getting involved as a realtor really taught me a lot, and it gave me a lot of additional income that I could put back into real estate investing. In corporate as a scientist, I was limited in what I could make. If I wanted to go on the managerial side, I could make more, but that would have been a career path, and I wouldn't have just gotten all that money instantly. I would have, sacrificed 30 years of my life to, maybe double my salary of a scientist. A scientist was pegged at about 100 grand, no matter how long you work there. And as a realtor, you can make a lot more money than that, and you can take those proceeds and you can push that back into your passive investment portfolio, and you can build and you can scale quickly. So, it's kind of a weird piece of advice. I'm not a salesy person. I never thought I would be in sales, but doing it really paid off. So I would say if you're not opposed to it, try it.
Awesome. So, since I put you on the spot, I'm gonna give you a chance for revenge. So, what's the question you have for me?
Hmm. Let's see. Why don't you just tell me about your 5 and 10 year goals?
Yeah. Well, my 5 and 10 year goals. Well, it's I need to be more clear as I can, but it's evolving. But so there's things that are stable in the 5 and 10 years goals, but the way to get there and what they will tangibly be is the difficulty as you mentioned, right? Like there's a million ways to be in real estate. So it's like I don't know exactly what active income I'll be earning and how that will be coming in, but I know the goals are in 5 years to be owning at least having bought my first larger multifamily property for myself. And by the time I get from 5 to 10 years, I guess 10 years, I'm 21. By the time I'm 31, I want to have, I think, like $200,000 of passive income per year at least. I think I can achieve that, but I'm just thinking like what would be like a nice, really comfortable lifestyle where I'm like fully replacing my, you know, like a high earning active income, right? Where I can fully have the option to do whatever I want with my time. I'm probably going to spend my time working, but it would be nice to know that I have like a backstop of income that I can support myself and maybe support a family as that grows. Be able to support a family and send kids to college if that's still something that people do in 40 years. But yeah, definitely thinking long term in terms of you know that kind of idea of having a stable passive income will be very will offer me a lot of flexibility and peace of mind in my life, and also love real estate. So I just love the idea of providing for people's physiological needs with providing housing, and also just the idea of finding undervalued properties and undervalued investments and creating value and helping my investors and myself that way.
It's really good. You're way ahead for your age. That's awesome.
I appreciate it. Yeah, it's I got the time value of money on my side.
That's right.
Well, Mark, it's been great having you on the show. Any way people can reach out to you or learn more about what you got going on?
Yep. So my cell phone is 585-314-9790, 585-314-9790. I'm also at Raise Capital, RAZE capital.com. Feel free to shoot me a text and I'll get you my Calendly link and we can set up a time to talk.
Awesome. Well, appreciate that. And I guess I'll give you an opportunity to leave any final words with the audience.
I think we covered it. I don't have any final words. You got everything out of me.
Well, I'm glad to hear it. Well, Mark and everyone listening, keep making milestones.
Before you go, I just wanted to say thanks again for tuning in to another awesome episode of Real Estate Milestones. If you've been enjoying the show and you'd like to offer your support, please leave a 5-star rating and review on Apple Podcasts. It's the best way to increase the show's visibility and help the message get out to a greater audience. I really appreciate your time and support, and keep making milestones.
The information provided on this podcast is intended to be educational and informational only and is not considered to be formal legal advice. The listener should not take or refrain from taking action based on its content. Any listener in need of legal opinion upon which to rely in decision-making should consider formally engaging an attorney to review relevant facts in detail and examine the pertinent law as it applies to those facts.